Welcome to Generation Digital Workforce, the podcast that's here to explore the role of robotic process automation and other digital technologies. Whether you're just getting started or you're looking for advanced strategies and tactics, if you're curious about where human and digital workers are coming together to transform the future of work, then this podcast is for you. All right, let's get into the show.
Hello, everyone, and welcome to the Generation Digital Workforce podcast. I'm Brad Hairston with Blue Prism. Today, my guest will be Sean Jump, a senior manager with the global advisory firm Sia Partners. And I will be talking with Sean today about the oil and gas industry and how it is positioned to embrace the digital workforce to drive transformation. Sean, thank you so much for joining me today.
Yeah, awesome to have me on, man. Really appreciate it.
So, Sean, why don't you start by sharing a little bit about your background, tell us about Sia Partners and also your current role with them.
Yeah, thanks, Brad. That'd be great. So I've got about 16 years of experience in the oil and gas industry, and I've had the opportunity to see a little bit of all of the parts and pieces around the industry. I started out in downstream. I've worked in midstream. I've worked in upstream, offshore. I've done work with the government on the strategic reserve. I've done special projects on technology development specific to oil and gas. And so I've really had kind of a broad view of the industry. I've been through ups, I've been through downs. And I've really, over that time and over those experiences, have been able to develop opinions about where the industry is going, why it's in the situation it's in today and in the past, and kind of where it needs to go to be successful in the future. And so in that 16 years, I've worked directly in the industry, and I've also worked in consulting. Right now, I work for Sia Partners Consulting in the U.S. out of Houston, Texas, for their energy advisory practice. And Sia Partners is a fantastic consulting firm. They're organized out of Paris, France. They've been around for 20 years, and they're the pioneers of Consulting 4.0. And Consulting 4.0 is really the intersection of data and consulting. And so every project that we do, industry agnostic, every project that we do involves some level, shape, or form of data. And that data is very powerful and it's useful in the consulting world to support our clients, whether it is data analysis, whether it's automation, whether it's understanding more about a business process, et cetera. And so Consulting 4.0, it really allows us to bring in data science and different types of technologies. And so in my role in Houston as a senior manager, I'm looking for ways to support the oil and gas industry with new technology, adapted technology, using data in a better way to help management teams and help the business overall make better evidence-based decisions.
All right. Thank you very much. Good background. So, Sean, you have a lot of experience, as you mentioned, in oil and gas. And I know you also have a lot of experience working with the digital workforce. So why has the oil and gas industry, in your perspective, been slower than other industries to adopt this new capability?
Yeah, I mean, that's a fantastic question. And actually, I get asked this question a lot, not only from people outside the oil and gas industry who kind of have a perspective and kind of have an opinion about it, but also from people inside the oil and gas industry who are saying, "Hey, how come we're not using technologies like this more broadly in the industry?" And so it's a very poignant question. And in my capacity and experience, I can tell you that oil and gas started out in such a way that at the same time Henry Ford was pioneering the assembly line, oil and gas had really hit its heyday. They were building their business models. They were developing new resources to exploit. They were looking at building out new technologies. And so they modeled their practices and their businesses very much after the way Henry Ford had built his assembly line. And so when you look at a modern oil and gas company, you still see parts and pieces of that in play. A lot of very specialized experiences, a lot of specialized skill sets that are required to make the whole company work, but don't necessarily have to interact with other parts and pieces of the business for the business to operate and for the business to work. And so if you go talk to a drilling engineer, they are exceptionally good at what they do, but they don't do geosciences, and they don't do reservoir engineering, and they don't do wireline analysis. They do what they do, and they do it very well. And the way that the business in oil and gas has been designed for a very long time is for very specialized skill sets. And so you see broadly across the oil and gas business that most companies are set up in this way. And what that tends to do is it tends to silo people, and it tends to silo processes, and it tends to silo data. And because of that siloing effect, especially with data, it can make it very difficult to integrate new technologies which require handoffs between different departments. And probably the biggest thing behind that is process stability. And so if you're operating an oil and gas company that's got international vertically integrated operations, it becomes really, really difficult to take a technology, any technology, and be able to apply it to that business and scale it in the way that you can the most efficiently, when you potentially have a bunch of cottage industries that are set up around the globe doing things in a way that work for them, but maybe not doing it in a way that works for the entire company to the best effect. And so it's a very good question to ask. And oil and gas is looking to change that, and they've recognized that that is a problem within the industry. And so people are taking steps towards breaking down those silos, cross-training people, bringing people internationally, and figuring out what is the best practice to do and how they can apply that internationally across borders. And so there's some really big steps that are being taken. But unfortunately, it can take quite a while for things like that to happen. And when you compare oil and gas to other industries, say like a Google or even an Amazon, their data analysis and the way that they capture data is so much easier than what happens in the oil and gas industry. You know, if Google wants to go and do a deep dive customer analysis, it's literally a click away, because all of their customer interaction points are through the internet. Basically most of their customer interaction points, and it's really easy to data mine off of that type of interaction. Where you go to the oil and gas space and you're looking to do the same type of customer data mining, you have to go across so many different departments and connect so many different people throughout the value chain. It becomes extraordinarily difficult not only to collect the data that you need, but to make any sense out of it. And the people who are really, really good at doing that typically are not vertically integrated, and they're typically not international companies. It's just more difficult at scale to try to operate a business that's international, that's vertically integrated, and in the industry like oil and gas, where it's difficult to collect data and get people to connect the dots across the industry.
So Sean, given all of that, why is it so important for these companies to now, begin integrating digital labor into their workforce? Can you speak to that?
Yeah, so digital labor is, in my opinion, is going to be the most impactful technology for oil and gas over the next 5 years. And I say that because there has been a lot of research and time and exposure given to other technologies like machine learning, like artificial intelligence, and those are all fantastic technologies. But the reality of using those technologies as compared to like a digital workforce using robotic process automation is that when you compare those two technologies, the machine learning and the artificial intelligence, while it's very cool and it can do some amazing things, is incredibly difficult to scale. It's very expensive to implement and integrate, and it's difficult to maintain and run at a level where you can use it across the company. When you compare that to like an RPA, there is some fantastic data that points to why RPA and digital workforce will really be the savior of the oil and gas industry. And so I went back to 1946 and I took two data points. I took the inflation-adjusted closing price of oil and gas for West Texas Intermediate, and then I looked at the inflation-adjusted percentage of SG&A costs for all of the majors and super majors on average. And so that's just collectively, it's an overhead percentage. And if you track those two data points from 1946 all the way to the end of 2018, which is where I stopped collecting data, both of those lines move in perfect harmony. And so when commodity prices go up to $120 a barrel like they did back in 2012 and 13, what you see is every single oil and gas company going to drill more wells And when they drill more wells, they hire more contractors, they get more invoices, and they go hire more people to go process those invoices. And so that's just a microcosm. That type of scenario plays out across finance, accounting, operations, maintenance, engineering, tax, legal, all across the company. They're bringing in more people to support more business operations, more activity. And it's been that way for, close to 100 years. They've been operating in the same type of method. And so what oil and gas is going through right now is a perfect example of how digital workforce can help parlay some of the costs associated with bringing in a lot more people and create an environment where the companies have the ability to be profitable and to grow revenue in a low commodity price environment. And so if I look out 5-10 years from now, as more and more oil and gas companies adopt the digital workforce and they're focused on robotic process automation, what they can effectively do is they can unhinge those two lines. And so commodity prices can go up, they can drill more wells, they can get more invoices, and rather than going out and having to hire thousands and thousands of more people, or even try to, outsource it to another part of the world, all they do is they spin up more robots, software robots, using programs like Blue Prism to come in and process those invoices. And as long as the company is very diligent about the way that they do it, they've got a good strategy, they've got good partners that understand the technology, they can do it very effectively, and they can do it very affordably. And when the next commodity price spike comes, they'll be more prepared to extract more profit out of that situation and add more value to shareholders than other companies in other industries.
Yeah, that makes a lot of sense. Well, let's talk use cases. The rubber really meets the road when you start talking about real, specific examples of where digital labor, could really make an impact in oil and gas. And I know you have a lot of thoughts around, some unique kind of industry specific areas where it could add a lot of value. So why don't you share, maybe 2 or 3 use cases that you believe all oil and gas companies should really, consider in the near term? That would be great to hear your perspective on that.
Yeah, for sure. I mean, honestly, to tell you the truth, it's difficult to narrow it down just to a couple because the industry overall, is just absolutely ripe for this type of technology. And, there's some companies that have already gone through it and they're well on their way to a very advanced and scalable digital workforce. And those are the companies that were more prepared for this commodity price drop than anybody else. And now it's starting to really turn heads. And as people look more at this type of technology and they start to really understand what the value can be for them, scaled across their business, there's a couple of use cases that kind of bubble up to the surface that, can be complicated and can include people from across the organization, even internationally in some cases. And so you'll typically find that when more people are involved and there's more clicks, the more valuable automating something like that and creating a digital workforce around it really is. And so one of the first ones that kind of comes to mind that maybe a lot of people don't think about is the AFE process. And the AFE process is authorization for expenditure. And every single oil and gas company uses this AFE process to approve funding to go do a capital project or approve funding to go implement an ERP system. But it's basically the business process that allows companies to approve funding for projects and then track all the costs associated with that project in a cost tracking system and then do look backs financially and say, okay, was it a good project or a bad project? And to be honest with you, based on what we talked about earlier about how siloed most oil and gas companies are, the AFE process is really broken across the industry, because lack of communication, poor follow-up, poor estimating, high turnover with the people who created the estimates in the first place. There's a whole lot of reasons why the AFE process itself can be complicated and can be heavy touch in terms of how many hours it takes people to do some of these things. But the budgeting and approval is one of the key and essential things. And right now, as people look towards financial discipline and creating value for shareholders, oil and gas companies are coming under extreme pressure to improve their financial balance sheets and to create more value. It's not just for shareholders, it's also for banks that are lending debt instruments to these companies to continue to operate. And so there's just not a lot of people who have the appetite to continue to invest in oil and gas without seeing those kinds of returns. And the AFE process is really the root of how those decisions get made. And so I've seen examples where we've gone in to a client and it's taken upwards of 12 weeks to create and approve funding for a project, to create and approve funding for an AFE. And through that process, it went through 26 different people. It had over 300 process steps and was taking upwards of 12 weeks to get it approved. And so we went in, we helped them out. We did some re-engineering on the process itself. We kind of cleaned house a little bit in terms of who needs to touch it and who needs to approve it. We did some automation behind the AFE to automatically create the AFE form and then send it to the engineers for approval. And if there was something in there that they didn't like, they could easily go in there and modify it and then take it to the next process step. And so we saw really dramatic changes in the time that it was taking people to put these AFEs together, get them approved, and feel confident about the numbers that were behind them. And most of that was attributable to using robotic process automation, automating a lot of the parts and pieces that a lot of oil and gas people didn't even think you could automate. And so we went through that whole project. We were able to get the AFE creation and approval time down to 3 days to create and then another 3 days to approve. And so we're talking 12 weeks down to 1 week. And that had a considerable impact on the bottom line for the business. And so that, I believe, is a really great use case to kind of demonstrate what a digital workforce is capable of and what robotic process automation is capable of.
Yeah, that truly is a good one. Somehow I knew you were going to start with AFE. Every oil and gas person listening to this podcast is nodding right now and agreeing with you violently. What about let's shift gears. Can you talk about a use case, maybe out at the drill sites? I know there's a lot of stuff that goes on out there that is very complex, but also very manual. I'd love to hear your thoughts on maybe a use case for automation, through the digital workforce at the drill sites.
Yeah, I mean, so digital workforce isn't just a back office kind of thing. It can really be applied throughout the entire business. It can be front office, it can be mid office, back office, direct on-site, well operations. It's really it's a technology you can see and scale across many, many divisions within oil and gas. And absolutely at the drill site, you'll see opportunities where you can take data that's coming directly out of the drill site and be able to quickly analyze it, create actionable pieces of data that you can then send automatically to people who need to have it in real time, who can make decisions to be more optimized about a drilling program. And so I can share one project that I've worked on that's directly related to drill site data capture and analysis. And I was working for one of the super majors, and they essentially had this process where every time they're actively drilling a well, they would assign a mechanical engineer to that well. And so 24 hours a day, while they're drilling, they've got a mechanical engineer who's looking at all of the readings that are coming through. And his main focus is to take the data that's coming from the drill head and compare it to the casing analysis that they designed and make sure that the casing they designed for the well is able to withstand the geology that they expected to see as they're drilling. Because if they see an unexpected geology or a change in geology, they might need to adjust the casing. And it's best to do that as soon as possible. But the reality is these mechanical engineers who are working day shift, they were working night shift. Those are important people in the business. And there's a lot of other different things that they could be focusing their time and attention and talents on to make sure that other operations are going smoothly and they're optimized. So in this case, what we're able to do is we're able to automate the analysis of that data coming right out of the drill head, plug it into the formulas that the mechanical engineers were using to calculate what the safety factor was for their casing. And if it was still within tolerance, then it was business as usual. You keep on drilling. If we found something that was out of tolerance, it was immediately flagged and sent over to the mechanical engineer so that they could then turn their attention to that process and say, okay, let's dig deeper. Let's make sure everything is still okay. Let's notify the well site, that we might have an issue with the casing design. And so using that type of scenario, we were able to free up the time of literally hundreds of mechanical engineers for them to then focus their time, energy, and talent on developing new casing, new well programs, looking at mud weights and chemicals to be more efficient in drilling operations, where previously they were just so consumed with this data that was coming in. It was really, really difficult for them to shift their focus to maybe some higher value activities. And so I feel like that's a great example of how you can use something like the digital workforce to come in and do something very directed, very focused, that's got a very important thing to analyze within the company. But you don't necessarily need the full-time attention of 2 mechanical engineers every day per well to make sure that that's within tolerance. And so that's a really good example of how you can use something like that directly at the wellhead and see some really profitable efficiencies and some profitable time that can be given back to your business.
That's fantastic. I love it that it's, again, it's more on the kind of the front office, if you will. It's not, not traditional kind of back office, finance and accounting or something that we're used to seeing. So that's great. I'm going to keep you in that area, and I want to ask you about trading, energy trading, and what do you see there? What's a use case that comes to mind that is pretty innovative and not something you see every day, but something that in your mind, based on your experience, you could see the digital workforce playing a big role?
Yeah, I mean, I think that's it's a great area to focus on, and especially right now, like what the market is doing with commodity prices dropping so quickly, 50% in value in literally one day, and they're staying low and they're kind of going lower now. Check today, West Texas Intermediate is just a shade over $20 at the close of the market today. And so that's putting a ton of pressure on people, and it's highlighting that your energy trading operations is a huge, huge benefit to your business. And when you think about what energy trading can do and what hedging can do in the marketplace, is when you're experiencing really strong backwardation in the marketplace, which is future contracts are trading lower and lower in regards to spot pricing, it's pushing the market down. If you're hedged out, a year, 2 years, you've got a good hedging program, you're going to be okay for a while. But realistically, it takes a lot of strategy. It takes a lot of manpower in your front office of energy trading to create those best in practice hedges and go execute those well in the marketplace and have them be profitable and protect your business. And when you think about how critical that is for everything that's going on in the industry right now, and you look at the hours that those energy traders spend each day, they typically spend about half of their time on energy trading. The other 50% of their time is spent doing other typically non-value added activities. It's going through reports. It's doing some light data analysis. It's doing screen scrapings off of other people's data. It's going to the Bloomberg terminal and checking updates on the news. A lot of these things are not directly attributable to what they do. And really where they should focus their time and attention is creating the best partnerships in the marketplace with either brokers or other oil and gas companies to find the best arbitrage, to find the best partner to do deals with, to find the best liquidity for your business. And when you take their time and attention away from those activities, if you look at a company like, say, a Chevron, a Shell, ExxonMobil, all the super majors, if they're able to execute one trade that's a penny less than what they could have done it for, you're immediately talking about millions of dollars, right? The volumes that these companies buy at, it's really that critical. And so I've had experiences where I've worked with energy trading front offices to automate a lot of the things that they're doing with their day, as well as just simply things like trade entry. And so when a trader goes to enter a trade, he typically uses a couple different systems. So one is ICE. It's a chat messaging system that they communicate with to brokers and to other third parties that they want to buy or sell commodities with. And so the deal gets done in ICE first. and they're going to chat and they're going to say, okay, confirmed, we're going to send 1 million barrels of West Texas Intermediate at this spec, these volumes, we're going to send it on this date, and this is the agreed price. Great, done, finished. Both brokers see that in the ICE system, it's captured. Then they have to go into their own systems at whatever company they work for, and it's typically like a front-end trade entry system. They're going to retype in all of that information again, and then typically they have to go to a third system, like an ERP system, and then enter it in directly there. And so when you're talking about some of these critical guys, and the brains and the activities that they're doing on a daily basis, and you're asking them to do triple entry for one trade, it ends up tying them up for a lot of time. And so we've been able to support businesses with automating the requirements for doing double, triple, quadruple entry in some cases, to where they don't have to go through that process every single time. And what you see is, traders that are busy and tend to get distracted, it's really easy for them to mistype something. And, it's just human nature. They got a lot of trades that they're working on all at the same time. And if they've gone through double entry and they're waiting to do triple entry and a bunch of stuff pops up, it might be half an hour and an hour later when they come back and they do triple entry on that same trade. And they've had so much other stuff going on. It's super easy to just mistype something, forget a date, put in the wrong volume, the wrong price. And that creates a ripple effect in the company, which ends up doing a lot of recycle. You've got people in accounts payable, you've got people in contract administration, you've got literally truck drivers and pipeline operators and marine vessel operators who are getting bad information. It all kind of generates from that trade situation. And so we have seen clients be very successful in using the digital workforce to take away some of the things that an energy trader does in the front office, to have them be able to focus on what they should focus on, which is absolutely getting the best deal that they can in the market to either buy or sell the commodity that they need for their business. And the trickle-down effect from that is you can also apply the digital workforce in places like contract administration. You can also apply it in places like scheduling nominations across a pipeline and getting the volumes that you need. There's just a slew of things that you can do throughout the energy trading ecosystem that can improve the way your business is run, get better data quality, and improve the profitability of the business overall. It's really a fantastic area because a lot of people would think about digital workforce and they don't think about the front office. And the reality is the front office can literally be the most impactful place where you can apply that, because that's where the big transactions are happening. That's where the big dollars are moving. And so if you can find even a small area to apply digital workforce, you can see some tremendous gains.
Oh, totally agree. Well, these are all three, amazing use cases. And as you said, I think you probably have 30 or 40 more that you could take us through.
Oh yeah, man. We could talk about it all day.
Yeah, I am sure. But I love these, and I really appreciate you walking through those. So we're kind of at the end here of our podcast. I want to ask you one more question as we close. And think about an oil and gas company that's listening to this podcast, and they haven't really begun the journey into the world of digital workers, robotic process automation. How would you coach them to begin? What would be some of the initial steps they should take, to kind of get this rolling?
Yeah, that's a great question. That's a question we get all the time is, it's such a big thing. When you talk about where can you apply this type of technology, the easy answer is across the entire company. And so that can be incredibly overwhelming to imagine, like, how can you really apply this across the entire company? How do you prioritize? Who do I even talk to get started? And so the reality is that the absolute best way to get started with creating a digital workforce is to start with a rapid assessment. And the best way to do that is to partner with a company that understands the technology, understands your business, understands the vocabulary of the people that operate in your business, can speak their language, and can bring use cases from other clients that they've worked with, and tell you immediately, where you should be able to find good value. And so, we typically call that rapid assessment. A lot of people have like a coined term for it. Sia Partners has a methodology that's proprietary to our company that we have used and deployed within a bunch of different industries, but myself, we've used it at oil and gas companies to quickly come in, look at different divisions, understand where there are RPA, digital workforce hotspots where you typically find the most value, and immediately kind of move in and start assessing that with the client. And so the methodology that Sia Partners uses has 17 distinct variables that you're able to easily measure using SME knowledge, and include some of the leadership in the conversations to talk about, are these business processes the right ones to focus on? Are they ready for automation? How do you prioritize these to maximize your return on investment? And I always tell clients that the first bot, the first digital worker is always the most expensive because it takes a lot of kind of upfront time to kind of get the ball rolling. But once you understand and you've got a good roadmap and a good strategy, you can really start to see the scalability shoot way, way up. And that's where you find your hugest cost savings, is when you find it at scale. And so when you do 5 bots, you do 10 bots, you can find some good ROI. It might take a little while, to pay off some of the initial expenses. But man, when you get up to like 50 bots, 75 bots, 100 bots, that's when the returns really start coming back in. And when you talk about, what big companies are doing in oil and gas that are using digital workers, they have visions of upwards of 500 bots operating in their company. And so when you talk about that, you've got to have a really good underlying foundation to make sure that when you've got 500 digital workers that are out in your workforce, that you're able to kind of control that, understand how it's operating, utilize it to the best of your ability, manage around process changes, help train people and identify new opportunities. There's a whole slew of things that goes with running a program upwards of 500 bots. But when you're just getting started and you want to put in 1 bot, it's super critical that that first bot that goes in is a good process, and selecting the good process and making sure that it's a home run on the very first one is absolutely critical to using this type of technology and having it adopted throughout the business. And that's where I see a lot of companies make mistakes, is they want to go at it quick and they want to go at it as cheaply as possible, and they want to get their first bot in so they just understand how to use it. But they take a lot of missteps in that first time that they go through the process. They learn a lot, but by the end of it, they've got a bot that's maybe underdeveloped. It wasn't a really good use case to begin with. They're having problems running it. The data's changing. The process isn't stable. There's a whole slew of things that Sia Partners will help you kind of walk through to make sure that your very first bot is a great experience, and that using a technology like Blue Prism is a great experience because Sia Partners is certified and trained in Blue Prism. We've got great implementers. We've got great strategists that know how to use the technology and bring it forward and do it in a way that oil and gas companies will understand, speaking their language, using their vocabulary, and understanding where they can have good experiences with it. And that's absolutely critical, because if the first one goes bad, you're not likely to do the second one or the 10th one or the 100th bot. You're going to say, no, that's it. We're not going to look at this anymore. And so that's where I see the critical thing is absolutely getting the first bot right, making sure that it's applied in the right way, and partnering with people who have done it before and can make that a smooth transition and a good experience for getting the first one into production.
Great stuff. Great stuff. Well, Sean, thank you so much for joining me today on Generation Digital Workforce, and really appreciate your insight and just how you've, leaned on your many, many years of experience in oil and gas and in digital workforce, solutions, just to provide us some good food for thought. I think most people that are listening to this right now are going to be impressed with your, really, really innovative and insightful thoughts on how to go into this and where some huge value drivers are for oil and gas companies. So thank you again. I appreciate it. And that's a wrap.
Yeah, absolutely, man. Big shout out to everybody in the Houston Sia Partners office, and definitely a big shout out to everybody in the Paris, France office who is going through some kind of major coronavirus issues right now, adapting to working at home, and understanding how to do that with with friends and family, and a lot of times kids in the background.
Absolutely. Absolutely. Well, be safe, and thanks again.
You've been listening to Generation Digital Workforce. If you want to hear more about RPA, AI, and other cognitive technologies that are shaping the future of work, join us next time as we continue to go deeper on these topics with industry innovators and experts. To make sure you never miss a future episode, subscribe to the show in your favorite podcast player. And if you've liked what you heard today, please leave us a review. It's one of the best ways to help more people find valuable content. For show notes and more info, visit us at blueprism.com/podcast. Thank you so much for listening. Until next time.